As we celebrate our country's 250th birthday, we look back and realize how many components have contributed to our country and our citizens' success over that 250 years.
Absolutely.
But as investors, we look back and we realize the profound component of the equity markets, which started in Philadelphia in 1790 with the United States' first exchange.
Incredible. It's 236 years ago. Think about the impact that the equity markets have had, not just on business and innovation and prosperity, but to the lives of everyday Americans.
And it's really been in two parts. The first is how the equity markets have allowed the capital flow and formation of innovative industries to really take place, starting with the rail industry and then, of course, the automotive industry. And in the late 1990s, we saw the tech industry take boom. Without the formation of capital and the access of capital, these companies wouldn't have had their innovation flourish. And it's made an incredible contribution to our country as a whole. And that's really the first component of the equity markets. But the second, and is even more powerful, is how it allows the average middle-class American to participate in the growth, the prosperity that these companies create.
Absolutely. Phil is fond of talking about how when he first got into this business in the late 1950s, the Dow Jones Industrial Average was at around 650. Today, it sits at over 50,000. Now, that level of wealth creation has had a profound effect on the lives of millions of American families, and the prosperity that it has created has changed the lives and the course of family histories in incredible and magnificent ways.
Over the past 236 years since the first U.S. stock exchange was created, we have literally had trillions of dollars funneled into companies developing computers, the internet, smartphones, modern medicine, biotechnology, and the results have been incredible with increased productivity across all sectors.
One of the most beautiful things is that it allows the average American, the worker, to actually be an owner of some of these great companies that are going out, changing the world, and creating tremendous wealth. And someone with not a lot of wealth can buy a minority share in one of these great businesses and participate in this shared prosperity. It's one of the things that makes America the greatest country in the history of the world.
As we celebrate our country's 250th birthday, it's nice to look back and acknowledge all of the contributions that have been made over that 250 years. But it's also fun to sit around and talk about some of the positions in the MPMG portfolio, specifically some of the positions that have made a wonderful contribution in the past, but also highlight some of the positions in the MPMG portfolio that we're excited about owning into the future. At last year's event, we outlined how we are positioning our clients to be major beneficiaries of what we described as the fourth industrial revolution, artificial intelligence. We specifically discussed our commitment to identifying the picks and shovels, companies that were powering this transformative technology. And one standout we highlighted was Coherent Corporation, the company that uniquely supplies the advanced optical transceivers that enable data to flow at unprecedented speeds and scale within all of these data centers. Well, in 2025, Coherent delivered earnings per share of $3.53 per share. And in 2026, that is now projected to rise to $5.45 per share, a 54% increase. Analysts expect another 50% increase to jump in 2027 to approximately $8.20 per share. This tremendous growth is underpinned by a major strategic partnership with NVIDIA. When we first shared Coherent with our clients in our video last year, the stock was trading at about $100 per share. Recently, we've been trimming our position in Coherent at as high as $400 per share for our clients, an incredible confirmation on our original thesis. So this leads us into another exciting position in the portfolio, which has been Corning, or GLW. Tell us a little bit about Corning, Dad.
Corning is a 170-year-old company that exists because of its outstanding innovation that's taken place over all those years.
14 years ago when we bought Corning, we always said that this is not just an old school glass company. This is a technology company. From Thomas Edison to automotive to the James Webb Telescope to Gorilla Glass to now fiber optic cables in AI data centers. They always find a way to be at the forefront of innovation and technology.
All this innovation is leading to some wonderful revenue growth. When we bought it in 2012, it was doing $8 billion. For 2030, we're looking at $40 billion as projected by many of the analysts. Now, the demand for Corning is incredible. What's interesting in all these multi-billion relationships, they are funded. Apple has committed $500 million for Corning to pursue their work on Gorilla Glass. Meta has committed $6 billion to Corning for more fiber optics. Amazon is in the billions as well for fiber. And NVIDIA has committed a $3 billion plus contract also with Corning. Now, the interesting thing about these relationships are the customer is putting up all the money. Corning has no obligations to repay any of these billions that are being funded to them. Their obligation is create capacity so that the customer can have product.
This is a company that is in the right place at the right time. Data center build-outs won't happen without a lot of money being spent on Corning products. One of the newer positions that we've added to the MPMG portfolio is a name that many of our customers and our clients know, and that is the name of Uber. Now, we acquired Uber back in March of this year at around $75 a share after it had fallen from north of $100 per share in October of 2025. Now, Uber, everyone knows as the ride-hailing disruptor that really changed the way that people travel, not just here in America, but throughout the world. Now, part of the reason the stock has fallen so much is, in fact, one of the key reasons that we like this name so much, and that is that there's a tremendous threat about Uber being less useful in a world of autonomous vehicles, self-driving cars. And that's been the primary reason for the stock falling from 100 to 75, where we got interested and where we acquired the stock. There are so many car manufacturers that are going to be coming out with their own autonomous vehicles, but they can't have their own standalone autonomous vehicle networks. The ability of Uber, with its 200 million monthly active users, to aggregate all of this demand and be able to route cars to where they are needed the most is an absolutely invaluable skill. More importantly, it's not just us saying this, it's some of the biggest companies in the world that are agreeing with us. Uber has in place relationships with virtually every major autonomous vehicle manufacturer.
One of the positions in the portfolio that I think we're all excited about long term is Boeing. Today, Wall Street consensus sees Boeing growing their revenues from $89 billion last year to $98 billion in 2026, and in 2028, increasing to over $123 billion in revenue. That's the kind of earnings leverage you get when a massive backlog of more than 6,100 commercial aircraft, which is about 10 years of current production, and is valued at over $575 billion, finally converts into higher volume, higher margin deliveries. The future is very bright for Boeing, and we're excited for what the future holds.
And of course, the stock of Boeing is just incredibly cheap when you consider that its true competitor, Airbus, is trading at about 22 times 2028's cash flow. Applying that same multiple for Boeing, that would put the stock of Boeing nearly 50% higher from where it's currently trading. This is a cash flow generating machine of a company that is deeply misunderstood.
As we celebrate our country's 250th birthday, it's hard to imagine a company that may be more important than Boeing. They have been our country's largest exporter, our country's largest employer, and it's hard to imagine a superpower existing without its ability for aircraft, defense, and space like Boeing is. So we're very excited to own it for the next many years.
It's a great American company. It's the largest private employer of American citizens. The future is very bright with Boeing, as is the rest of the companies in our portfolio.